Hello there everyone, welcome back to my YouTube channel. So in today's live forex market analysis, our pair is the XAU in also known as the gold. So without any further waste of time, let's try to find the tops. So as usual, I start from a forward time frame, switch to a line graph, and then identify my key levels. Identify key levels at my lowest low and then my previous highs and lows. So this would be my previous high, my previous low, and this my previous high. So switching back to candlesticks, the first thing I see is that I'm seeing that the gold pair is in a bearish trend, and also if I look, yes, the market is in a bearish trend indicator for that trend, in this bearish trend. And also if I look inside the trend, I'm seeing that there's also another bearish trend that has been broken out of. So if I move to the hourly time frame, you would see that the gold was selling in gold broke out of our trend, our bearish trend, broke out of our bearish trend, retested, and is now consolidating. So one thing that I'm seeing from this pair is that I'm seeing some sort of a flag. I'm seeing some sort of a flag here. So I want to cater for that. I'm seeing this pattern right here, an extending type pattern. So basically this is like possibly a continuation pattern, hence it broke out of our bearish trend and is now consolidating, giving us this type trend or flag, bullish flag, which is a continuation pattern. The market might push to the upside, break out, retest, and continue the direction, complete our bearish trend or to touch our nearest key level. So if I move to the forward time frame, there are some zones that I want to cater for. There are zones that I want to cater for. Okay, also see this is my zone. Yes, I'm also seeing that as my zone. So okay, so these are the zones that I wanted to cater for before we further look for setups. So now that I have my zones here, the market has a higher chance of actually just. So here these are my zones, and can see the market from here reversed at this resistance zone before it actually made this upward move, and the market might continue from here, reverse, then break out, retest, then from there continue to the upside. Or the market can, okay, so this is what the market can do. The market can do this, push to the upside, touch our resistance trend line, gain enough, reverse, gain enough to the break and the retest, and then from there it might buy. Or the market can either in a head and shoulders. So since this is the third touch of our trend line, the market can from the drop and give us the inverse head, the head and shoulders. This is where we would enter our sell and possibly close at this nearest zone here. So basically that's how you'd cater for trading opportunities or setup. So if I move to 30 minutes time frame, okay, is the minor zone. So this is no zone and I'm catering for this zone only if the market respect our sell setup, which is when the market gives us an head and shoulders, we can enter here and possibly close there with our stop loss just above our zone here. Stop loss would be there, and then our take profit would be this zone here. If the market gives us this pattern on the gold pair for sells, and then for buys, if the market doesn't give us selling opportunity, should it give us buying opportunity? And as I said, if you're analyzing, try to cater for both buying opportunity and selling opportunity. In that way you would be prepared for any situation. Yeah, basically any situation that the market gives you, whether buy or sell, you are ready to have a setup that is ready. So for buyers, should the market push to the upside, reverse, gain enough momentum, give either a double bottom, double bottom, and that's how it might gain momentum, actually break outside and retest, or actually it continues to the upside. So if the market does actually give us this double bottom, I would personally wait for this retest here, and I would place a buy stop here just above where the market reverse here, that if it does shoot up, then that would be that would confirm to me that my buy setup is now validated. I can execute the trade. So setting your stop loss and your take profit would be this nearest key level, or it can be the size of this pattern, this continuation pattern. You can calculate it from the retest. As you can see, it's even past our nearest key level. So your exit be on your key level, and that's how you that's where your take would be. then your stop loss can either be just below this resistance zone, or it can be just at the touch of this zone here, either here or below the zone, right? And that's how you cater for buying opportunities on the gold pair. So I wanna see clearly. I wanna see where is the right stop loss for this trade. So the right stop loss, yeah, it can either be there at the touch of the zone or just below the zone, and still your risk reward ratio is good. The 1:2.28, that's decent, and here it's 1:3.6. But there's really no difference here. The only difference when it comes to your risk reward ratio is your risk management. How are you interest on the trade? For me personally, that's the difference. With the risk reward ratio, doesn't really mean that, as long as you have a risk reward ratio of at least 1:1.5. Basically, what I mean by that is risk reward ratio that is something like 1:1.5 risk reward ratio. That's the minimum like risk reward ratio you can use when you're trading, nothing less than 1:1.5. So for me personally, with this buy trade, I can either place my stop loss here or below there, but what I'm gonna do is to place my stop loss manually. So what I'm gonna do is to obviously trade without a stop loss and a take profit. And even though it's pretty dangerous, but as long as you're gonna keep your eyes on the trade, then it's okay. So if the market, say for example, activates my trade and then pushes to the upside, gives me an inverse head and shoulder and stops me out here, and by that way, setting a manual stop loss is whereby I close my trade manually rather than automatically. So if the market reaches here, then I will set my stop loss there, just below the zone. Then if it does then touch my stop loss, then that means it's a fake out and we are still inside this trend here, and that's how it invalidates my setup. But here, that's how I would set stop loss manually, and this would be like my overall stop loss here. But if the market pushes to the downside, that's where I can now close my trade. So yeah, that's the analysis for this the USD pair, known as the gold pair. So if you enjoyed this video, hit that like button. If you have any questions or suggestions, leave them in the comments. If you want more live, kindly subscribe to the channel. Once again, thank you for investing into this video, and without any further waste of more time, I will see you in the video.